Good morning, video morning brief of the U.S. stock market and Rich Pause for Critical Point, Tuesday, February 25th, 7:47 a.m. Eastern Time. Okay, stock market is clearly in a level 3 downtrend, so that's your trend, largest trend, most important trend during a month. As you break that into increments, we find level 4s and believe the model's been tracking it quite well during this sharp decline. Rallied to a level 4 and then down yesterday. And the model's looking for level 4 bottom around 1 p.m. Eastern Time into early overnight trade for the futures. It's suggesting the cash market really ought to bottom today. Now, even though it's suggesting lower prices into 1 p.m. or later and then higher by tomorrow, there is a possibility the lowest price shows up early today because after all, these level 4s are about 70 or 80% accurate. But it's also that the market has been beaten up enough that it's losing some of its downside momentum. People are asking how low they want to sell it. It's about time for a little bit of positive news to come in. But at the same time, it looks like the overall trend of news is just continues to evolve more negative. This sentiment, people getting a little gloomy, a little pessimistic. But there's an old saying in the commodity industry that the funds sell for about 3 days. Okay, they can also just buy for 3 days. So something's going to make this at least have a hiccup, knee-jerk moment here of rebounding. So the point is, we may see the lowest price early today, but it shouldn't rally all that well till it gets past that 1 p.m. period into the close, maybe early in the overnight session. But it does look like for level 4, the market can pick its head up by tomorrow. The question is, does it start up today or not? As far as additional downside, it looks like it's a nice trend there for this level 3. Yes, it can go down and test some of those lows near 59.50 around that area for the futures. Cash would be just a tad lower because there is still a little premium in the futures. Now, as we zoom out from this level 4, so in other words, we're looking for a bottom in level 4, but there's a good chance it just doesn't turn up today. Okay, that's going to wait till tomorrow overnight to turn up. But it is oversold, and we can just see, yeah, there at least ought to be one blip up. Well, there's something else going on for the level 3 trend. The level 3 trend, the model's saying it can bottom as soon as today with this level 4 bottom. So in theory, 1 p.m. and later, but it's quite possible we've already seen the lowest price or will see the lowest price this morning. It just shouldn't rally much until that bottom's in place, if it's going to work. And again, that's 70 to 80% probability. I don't favor a level 3 bottom today. I favor tomorrow later, but I got to admit the model is showing some decent evidence here that we do have to consider level 3 bottom today. Now, a level 3 bottom today or tomorrow would still be the earliest allowed. It's possible it bounces into tomorrow for level 4, pulls back over the next couple of days into the next level 4 and places a level 3 bottom. It's possible it rallies yet again and comes down, okay? Level 3 ideally bottoms this week. In theory, it doesn't have to early next, but it's looking like it will bottom this week. Now, the level 3 top, the next level 3 top, and the last top was on February 19th. The next level 3 top ought to occur next week, and it can occur early. We may only see a 2, 3, 4 day bounce, really, into a level 3 top, but it might be 5, 6 days, trading days. I don't think it's going to be longer than that. History shows it might go for a couple of weeks, but that's not what the model is suggesting. It's as if all we're going to get is a little larger knee-jerk reaction than what we may get by tomorrow for the level 4, okay? And that's about it. That they're going to want to retrace this, even if they could bottom it at this price level now. In other words, the level 3 may bump its head at no higher than 6,100. And the reason is still larger trends are actually bearish into late March to early April, and Wall Street is increasingly more bearish. Okay, people are just turning pessimistic. They're kind of tired. They're at least bored. They just don't see much going on here. Even people who do not want to be bearish are saying this market may not go anywhere for months. Okay, so yeah, I'm looking for a level 3 bottom starting now. I prefer really later in the week. When I say Wednesday, really, if the level 4 would work, then it shouldn't bottom Wednesday. It ought to bottom more like Thursday or Friday. So there can still be more downside, but I just wonder if they're going to put the brakes on, provide a little bit of a knee-jerk reaction up here a little bit before going probably still lower. Now, the interest rate market seems to be dead serious about that we've got economic issues going here, and now it's less worried about inflation. It's actually more worried about disinflation, perhaps deflation, perhaps a recession, and it's kind of trying to help out to protect from that. And that may be the evidence of that may be a bit deceiving. Some of this can be nothing more than people pulling money out of the stock market and buying bonds, but the bond market isn't really willing to offset that. It's got a decent balance there. And so the net result is the demand increases for bonds as people want a little safety, lock in some interest rates. I would tend to think they would do more of that in the money market, frankly. I don't think I would want to lock in interest rates right now because I think it probably will be higher a little later in the year. But I get why they're doing it. So there's a little of that impacting the market at this time, okay? I don't have anything on the 60-minute hour chart to show you that's worth thinking about. So we're going to go right to the daily. Go to the S&P 500. That looks ugly, dip below the 40-day average, probably near the 50-day average. I think it wants to go to the 100-day moving average, about 59.44. And it may do that today, it may do it later in the week, then pick its head up, try to get back above the 40, 50-day moving averages. And then I think it's going lower still. And if it can't find support around the 100-day moving average, the moving average people, traders, are going to consider the 200-day average of 5,700, which I think is a bit low right now. That may occur late March, early April relative to larger trends. I don't think there's a reason to do it right now. And yet I'm wondering, can we have a crash and burn market because it's just been so bullish for so long that we can even make a big deal out of not so big deal negative news, okay? At any rate, do keep an eye on those moving averages and keep an eye on this gap that was created on January 15th. I think the closer it gets to that, it will become self-fulfilling prophecy, and they'll want to knock this down to the 5,900 to just below it to try to fill that gap. So that's downside potential. The daily indicator widening spread suggesting chance for lingering near-term downside momentum next 1 to 3 days. Well, the model's saying that's feasible, that's allowable because we still got to find that level 3 bottom. It makes sense. The indicator is looking ugly. It is quickly dropping towards oversold, however, meaning they can put the brakes on. So I think this 100-day moving average and the January 15th gap is probably about as low as it's going to go, and we'll need to rally for a few days, maybe into that next level 3 top next week, and then it can go lower still. And I think there's potential to go lower still, which I'll explain in a moment. This is the NASDAQ 100 futures as of this morning, and I wouldn't be surprised it's going to be a turnaround day. By the end of the day, it's actually up some. It is oversold, deeply oversold, so oversold that I'm concerned that's a sign there will be more selling coming later in March so that the market makes new lows for the move, but the indicator does not, and that would set up for a better bottom. This turned oversold so quickly that I think what it is it's a sign not to buy, this buy signal, that you're not going to get much of a bounce. You need to wait for a better level 3 bottom later. Watch these moving averages to bump it ahead and daily highs here. I think the best it can do is make some kind of little retracement. This is the Dow Jones Industrial Cash, and it's near the moving averages again, but there's still lower moving averages. It could bounce off these moving averages, go to the 5-day moving average, come back down through, and I think that's going to scare them, okay? The market is oversold, should be looking for a bottom. Problem is that indicator is wide enough, at least as of this morning, to suggest chance for lingering near-term downside momentum. If we look at some of the outside factors, such as NVIDIA, that looks ugly on the daily chart, and no model analysis, just taking a visual. And then this, the Mag 7, it finally gave in from that trading range. I said I thought that was the best forecast. It could have been a bottom, but it was a top on the way down, more of a bearish flag. Some could argue some kind of triangle. There's all kinds of chart talk about this. But anyways, violating all these lows, I can see it snapping back up, but I think it's got to go lower still to kind of fulfill breaking out of that range. That builds some very nice downside potential there to suggest more supply than demand. there's still more downside coming. So let's zoom out for the weekly chart. So remember, the intra-week to maybe the most important intraday forecast is the market will be up tomorrow, but it really shouldn't bottom late today. But we have other factors saying, yeah, but we may have seen the lowest price here as they try to start doing a little shopping. As we zoom out for the better move during a month, it's saying we want to start looking for a bottom now into next week, ideally this week. I'm leaning more towards it's Thursday, Friday though. Okay, maybe Wednesday if we're wrong on the level 4s here. So I think there's still a chance of more downside, some kind of floundering around at least. Bounce it next week and then more downside. So as we then zoom out for those monthly moves to multi-month moves, I'm very convinced that the model's right. The top last week was a level 1. And if it was probably the minor long-term top. But again, I don't think we should get too excited about that. It's too confusing to explain. There's been too many opportunities for it to be placed. Instead, we want to consider, since there is a minor long-term bottom due, May, June, July, but maybe as late as October, that we want to say we're still vulnerable to an actual bear market, maybe 20 or 30% down, something weird, strange that might only occur every 100 years that's down 60% even. So we do want to consider that kind of thing that could develop here. Right today, those much lower targets are not the best forecast, all right? Stripping away that minor long-term stuff, however, and just sticking with the level 1, it can move down in the level 1 into May, June, July, and -7 to -11, maybe -13% is the best forecast, but just have to consider -20, -30, -60%. All kinds of things can go right or wrong along the way. Now, breaking this level 1 into components, there will be level 3s creating pops and drops on that weekly chart, but overall just moving lower. They're trying to do their own things, but they're also going to fall in line. But one or two of those is probably going to create a more sizable up move, and that's going to relate to a level 2. So the model is saying be bearish into the week of March 17th, onto the week of April 7th, then be bullish for just 2 or 3 weeks maybe, and then for level 2 top, and then on down, and that might be the more dramatic, serious downside into May, June, July. Now, if we have this level 1 incorrect and it's really a level 2, then this was a level 1, which originally that's what I forecast from the model and originally called it. And percentage-wise, it works. It may well be the best forecast. If so, what should occur is this is not going to drop as much as I would like for a level 2. It's then going to rally more than what I would like for level into the true level 1, and yet another opportunity for a minor long-term top. So we can have a record high by April still. There's nothing here saying it will not occur. But the best forecast, 2 out of 3 forecasts, is no, April is not going to be at a record high, and it's going to be all the way back down or lower still by May, June, July. So down, up, down, overall down. And if you want to just focus on the near term, just say down into late March, early April. Now, the seasonal traders, they wanted to be bearish late February into March. They may stop being bearish early March. We may get a nice little blip up by mid-March from those type of traders. But I think, and I don't know if they're really going to be bearish late March and early April, but I think they'll be wrong if they don't. I'm willing to use the seasonals, but the business cycles are far more important and far more accurate, in my opinion. So I want to be bearish. And what do we have for downside objectives? Around 5,900 to about 5,818 for the cash. But as all my targets, they're always or better, or if it's on the downside, you might argue it's or worse. Okay, it can always go beyond a target, and I'm not wrong, and the model's not wrong. If anything, might even get an extra gold star, okay? Weekly indicator acting bearish, move from overbought, in sell mode, widening spread as of this week, suggesting chance for lingering near-term downside momentum next 1 to 3 weeks, while the model's saying you better think about 3, 4, 5 weeks, okay? This week it's trying to bump its head on the 5-week average that rolled down to acknowledge last week's negative reversal. And in my opinion, that was a classic negative reversal. Opened higher, then traded lower, and actually traded much lower. That is a sign of weakness. That was a big, big moment for the bears to be right. Bulls basically blinked first, actually. I'm not convinced enough bears sold. I think there's some are behind right now. There's really the bulls just said, I've been trying to push this higher, and now even I don't believe it deserves to go higher. I'm going to sell. Okay. All right, so it may actually, by the end of this week, we'll learn it bumped its head on that 5-week average, but I'm telling myself by next week, and perhaps late this week, we may see a blip back above it. And right here, I'm carving out 2 weeks for that level 3 top. I think it comes early rather than late, be next week. What we may see is a blip above the 5-week average, tops during the week for level 3, and is right back below it. I suspect on a closing basis, this market is weak enough. The weekly closes will be below the 5-week average. But it might scare us during the week of being above the 5-week average, thinking, oh, gee, that's pretty bullish. And then we find out they just fade it by the end of the week. I've got to be bearish into late May, into early April, okay? And the percent stocks over the 200 average is basically doing nothing. It's not telling me much of anything. The Dow Jones weekly index just looks like it's going lower. It's just hesitating, trying to catch its breath. And if it does bounce next week and quite a bit, my guess is it'll bump its head on the 5-week average and it'll just turn down anyways. I think we really got this one. I think we just got to be bearish, realize bear markets in stock indexes can be very broken, choppy. They can explode and take back 70 or 80% of what they gave you on the downside, only to go lower still. Now, that's how much you have to ride out and to deal with the bearish side of things. Okay, the NASDAQ also looks bearish to me. The equal weighted index looks bearish, okay. It can hesitate for a while. I'm not saying anything dramatic will occur into late March, April, but I want to leave the door open for it, that it can go considerably lower. And next up, I want to look at the interest rates, and the dollar and interest rates are giving me a problem. They should be going higher. It's like the market has flipped overnight and saying it's more worried about the economy falling apart than it is worried about inflation. So still a chance that it's going to bounce into March and maybe even higher by interest rates by May, June, July. But the lower they can put it now, the more unlikely we're going to have that inflation problem. Maybe it's the best to slow the economy down to actually kill the inflation or delay it, which is probably all they will do is delay it. So that'll be something we have to discuss more in the weekly update here, that the interest rates are kind of giving me a problem of the best story for the stock market, but yet they didn't interfere with the stock forecast. The stock forecast is right anyways, okay? Just some of the inputs weren't right, and it didn't matter. Stock market did what we wanted. It is acting bearish, and I think there's more bearish. Give you a quick update on the European. This is the 2X fund, EFOs, the symbols, the Ultra MSCI EAFE fund. I think it's got a level on top going lower into late March, April. The FTSE 100 index, kind of the same story. And then this is the European 2X UPV symbol, Ultra FTSE Europe. Also same story. I think it's going lower into late March to April. Past results are not necessarily indicative of future results. Have a great day. Thank you.